How whales are moving the crypto market. Greetings! Let's deal with one of the most frequently discussed phenomena in the crypto market, the place manipulation by the big players, whales. When you enter a trade, set a stop loss, the market suddenly turns around and kicks you out on your stop. Sounds familiar? It's not an accident and certainly not mystical. In fact, there are powerful players behind it who are after your liquidity. These large asset holders, known as whales, control a huge number of cryptocurrencies and can greatly influence the price. Their actions can leave most traders on a losing end. If you want to know how this hunt works and how whales move the market, keep reading. And always be aware of the real ways to earn money and protect yourself from manipulation. Subscribe to my channel, where I share insight and strategies for trading cryptocurrencies. Don't miss the opportunity to be the part of this exciting world. Subscribe to my channel and learn more about how to make money in the financial markets and be ready for any market changes. Who are the whales and why are they in crypto? Whales are large holders of the cryptocurrencies that hold significant volumes of the assets. They are usually investors, funds, or even groups of traders who hold such a large volumes of Bitcoin in order to cryptocurrencies that their movement in the market can cause major changes in the price. Example, imagine you have only one Bitcoin and the whale has 10,000 Bitcoins. If he decides to sell or buy a significant portion of his capital, it will cause a wave on the market and will move the price up or down. And so you, with your one Bitcoin, succumb to that wave and find yourself in disadvantage. Whales are not just large investors. They can be institutional investors, funds, or even exchangers that hold significant cryptocurrency reserves. Such players often have information and resources that are not available to the most market participants, which allows them to plan their actions in advance and move the prices in a favorable direction. Why and how do whales manipulate the price? The whales' goal is to maximize their profits. They use their economic influence on the market to create moments of panic and euphoria among the ordinary traders. And how do they do that? Selling in large volume. When whales sell large quantities of cryptocurrency, the price can plummet. This causes panic among small traders who start selling assets en masse, fearing of further drop. Eventually, the price falls even further and whales buy back assets at a lower price. When whales sell large quantities of cryptocurrency, the price can plummet. This causes panic among small traders who start selling their assets en masse, fearing further drop. Eventually, the price falls even further and whales buy back the assets at a lower price. Buying in large volume. When whales start buying cryptocurrency in mass, the price skyrockets. It causes a wave of optimism among the market participants and many start buying, which drives price even higher. At the right moment, whales can lock in profits, shifting the market again. Stop hunting. Whales know that most small traders have set stop losses. That is automatically triggered sales of an asset when the price falls to a certain level. They can purposely move the price into their zone to cause massive liquidation position and they quickly buy up assets for affordable prices. False signals and fake orders. Whales can place large fake buy or sell orders, creating the illusion of price movement into a certain direction. This causes other traders to act impulsively, and then the whales can cancel their orders and move the price in other direction, having already gained an advantage. Whale manipulation is real game or mass technology, and you don't understand how it works, you're likely to be in the role of the victim. By studying the behavior of the big players, you can better predict their actions and avoid losses. Could it end? For example, if the President Trump legalizes cryptocurrencies? This begs the question. Is it possible that the whale manipulation will stop if the government, including US President Donald Trump, introduces new laws and regulations that will make the cryptocurrency market more transparent and fair? On one hand, cryptocurrency regulation can indeed influence the behavior of whales. If clear rules and reporting requirements for large investors are introduced, it will limit the opportunities for price manipulation. For example, if exchanges are required to disclose large trades, such manipulation may become more visible and general to the public. This will reduce the risk of panic among small traders. On the other hand, though, cryptocurrency market is decentralized and global by nature. It means that even if strict laws are enforced in one country, whales may operate through offshore exchanges or countries with less stringent requirements. In addition, whales often operate anonymously, making it difficult to monitor their activities. However, if major players like Donald Trump starts actively regulating cryptocurrencies, it could give market additional legitimacy. In the long run, it could attract even more institutional investors, making the market more stable. And while it will be difficult to completely avoid manipulation, regulations could make it disruptive for private investors. And while it can be difficult to completely avoid manipulation, regulations could make it less disruptive for private investors. But remember, even in a regulated environment, whales will always find ways to use their resources and knowledge to make a profit. Your job is to learn from them, to adapt the market and conditions. To always stay up to date, get insights and strategies on how to make money with cryptocurrency, subscribe to my channel. I regularly share useful information that will help you stay afloat and master the hunt of big players. The cryptocurrency market attracts many participants, from small traders to large whales. And while manipulation by the big players may seem unfair, they are an integral part of the market dynamics. Understanding how whales operate and analyzing their behavior can help you avoid the pitfalls and even capitalize on the market movements. Remember that cryptocurrency is a volatile asset, and any price movements can be triggered by an actions of big players. But if you are armed with the knowledge, you will be able to act with confidence in any conditions.